We think the best way to minimize risk is to think. And the idea that you have, you say, I've got 60% in stocks and 40% in bonds, and then have a big announcement, now we're moving it to 65-35 as some strategists or whatever they call them in Wall Street do. I mean, that has to be pure nonsense. I mean, 60-40 or 65-30, it just doesn't make any sense. I mean, what you ought to do is have your default position is always short-term instruments, and whenever you see anything intelligent to do, you should do it, and you shouldn't be trying to match up with some goal like that. I found it entertaining. I was just reading yesterday an article, I think it was, about the two fellows at Google and all of the problems they're going to have because they're each going to get a few $1 billion. And I mean, I wanted to send a sympathy card. I almost went down a Hallmark store because this article went on. They've got this terrible problem and that terrible problem, and they're going to need lawyers and they're going to need financial lawyers. They don't need anybody. Those guys are smarter than the people that are coming to them, and they do not have a big problem. And they're very capable of thinking it through themselves. The people that have the problem are the people who want to sell their services to them and are going to have to convince them that they have a problem. But so much of what you see when you talk about asset allocation, it's just merchandising. It's a way to make you think that if you don't know how to determine whether it should be 60-40 or 65-35, that you need these people. And you don't need them at all in investing. I mean, most of the professionals that tell you you're going to get in great trouble unless you listen to them and adopt and sign up for their services, they're good at selling. But it's what my former brother-in-law that worked at the stockyards used to say, was that people would bring in cattle or something, and I'd say to him, how do you get the farmer to employ you to sell the Swift or Armour or Cudahy instead of the guy right next to you? I mean, it's a cow is a cow, and Armour's going to buy it the same way. And he gave me this disgusted look, and he said, Warren, it's not how you sell them, it's how you tell them. Well, there's a lot of that in Wall Street. Charlie?
Yeah, people have always had this craving to know the future. The king used to hire the magician or the forecaster, and he'd look in sheep guts or something for an answer as to how to handle the next war. And so there's always been a market for people who reported to know the future based on their expertise. And there's a lot of that still going on. It's just as crazy as when the king was hiring the forecaster who looked at the sheep guts. And people have an economic incentive to sell some nostrum. It can be sold over and over and over again. The really interesting figures are when you combine the underperformance of the market, say by the mutual fund industry, which is probably a couple of points per annum, that understates it. Now, if you take all of the investors in the mutual funds who are constantly whipsawing from one fund to another by a bunch of brokers who want commissions, now you take a subnormal performance and it goes down another 3 or 4 percentage points due to the shuffling of the mutual fund investments. So the poor guy in the general public is getting a terrible result from contacting the experts. And these guys are heading the scout troop and the community chest drive and are locally reputable people. I think it's disgusting. It's much better to make a living by being part of a system that delivers value to the people who are buying the product. But nobody refrains from creating gambling casinos or something on my theory. If it'll work to make money, well, we tend to do it in this country. Well, of course, you're hunting. That's part of the fun of life. And but I would say that the chief lesson would be that you're unlikely to find very many in a whole lifetime. And when you find one in which you really have thought it out and have confidence, for God's sakes, don't do it in a niggardly fashion. The idea that very smart people with investment skills should have hugely diversified portfolios is madness. It's a very conventional madness. and it's taught in all the business schools, but they're wrong.
The question of finding other advisors is a tough one. I mean, when I wound up my partnership at the end of 1969, and I had all these partners that had counted on me, and I was going to mail them back a lot of money, I felt an obligation to at least suggest some alternatives for them. And I recommended two people who I knew were exceptionally good and exceptionally honest. We put one of them on the board not long ago and reaffirmed it today. Sandy Gottesman, the other one was Bill Ruane. Now, I'd been around the investment world for a long time at that point, and those were the two I knew, but they were more or less contemporaries of mine, and I'd gotten to know them over the years, and I'd seen them for a long time. So I not only knew their results, but I knew how they'd accomplished their results, which is terribly important. I don't know that generation of managers now, but the fact that with the number of people I knew that I could only come up with two at a time when I was very active says something about the difficulties of finding managers. The one thing I can almost guarantee to you is that the promotional types going around to solicit the institutional investors are very unlikely to meet any long-term tests of ability and sometimes integrity. It's not an easy job spotting an investor. I think it's probably easier depending on the amount of time. You mentioned having children in the business and the amount of time you can spend on it. Every now and then you do, if you're conscious of the investment world and you have some kind of sort of grounding knowledge about what's going on, you can see something, as we did in junk bonds a couple of years ago, or as we did with all kinds of things some years back when stocks were cheaper. You will occasionally see something that you should load up on, and as Charlie says, that's what you really have to do. I mean, some of the people in this room loaded up on Berkshire many years ago. And the truth was they didn't need diversification. I loaded up on it. That Charlie did. And you'll see opportunities occasionally, but you're not going to see them every day or every week. If you think you're going to see an opportunity every week, you're going to lose a lot of money. Because people will come around and tell you that they've got them, and they may not be quite as flagrant as that fellow we had in the movie, but they're a version of that. Charlie?
The business of selecting investment managers was recently shown to be even harder than I had previously thought it was. A significant fraction of the institutional investment managers who run the nation's mutual funds actually accepted propositions to take bribes for betraying their own shareholders. It was as if a man came to you and said, I have a wonderful proposition. Why don't I kill your mother and we'll split the insurance money? And it was that ridiculous. And yet a significant number of the people said, gee, I would like some insurance money. And they just went right ahead.
And they were already rich beforehand.
Yes. And they've destroyed themselves, many of them, by making this insane decision. And I think many of them are probably think the outcome is unjust. And the downfall they've had.
And the interesting thing about it, of course, is that here is a huge industry where the people who weren't doing it have a great interest in having that reputation of the industry not get stained. And a number of them had to know what was going on. I mean, it's hard for me to imagine that people at most large mutual funds, even the ones that didn't, or mutual fund management companies, even the ones that weren't engaging in the activities mentioned, weren't aware of it. I mean, if you're in an industry like that, you're going to hear what's going on. And the Investment Company Institute was busy patting itself on the back, one meeting after another, and becoming very cozy with legislators. And there wasn't one thing done until a whistleblower went to Elliot Spitzer, and he got active in a very strong way with a very limited staff. And he uncovered and put on the front pages what was taking place. But the industry itself, with hundreds and hundreds and hundreds of people that must have known what was going on, and it went on for a long time, never said a word. It makes you wonder a little bit.